to the Big Biz Show. Taking care of business. You want fast-talking, hard-hitting discussions on business and finance? Maybe with a barroom slant and some really salty peanuts? We're not counting calories. We're counting cash. Before we get to the man with the financial plan, meet the money team. Costa, Mary, now Captain Finance himself, Sully.
Hey, wherever you're watching, wherever you're listening, welcome to another episode of the Big Biz Show. We're live from the Loft 100 Studios here in Southern California. Glad you are all along for the ride. Costa, Mary, Godwin, and Sully. I want to go straight to Howie, New York City, our market analyst, to get started, because a couple things. The market is, I want to talk about a market update, because we've had strong earnings from companies like NVIDIA that came out, and a market bubble is sort of when asset prices rise for sort of above what underlying share prices are. What's going on with the overall market, Howie? Because we're going into, we're nearly done with the first month of the first quarter of the year. It's acting as if we're going to have a giant year. Then all of a sudden there's a wait and see, and then all of a sudden we get another rally again. So what's going on? Howie is on mute.
No, I'm great.
Oh, there you go.
There you are.
How are y'all? That's my bad. Sorry, everybody. I think that we're poised to have a pretty interesting year. There's been a lot of news. So yesterday we had Microsoft's earnings come out, and they were weaker. They were showing less growth than was previously thought, and that gave the market a reason to come down from its actual highs. So we actually hit this week an intraday high for the S&P 500 of 7,000, first time ever. Congratulations, confetti, balloons.
Yeah.
But we saw last week, when it came to the Greenland and tariff threats and everything, this market is looking for reasons to go down.
Yeah, because
it's not finding them.
And at the same time, it's baking in some of these things that we're expecting to be big market movers. So when we're hearing the news, a lot of the stuff's already baked in. So it seems like, and if you look at RSI and you look at stochastic oscillator, we're not really in an overbought condition, except for a number of the biggest stocks are. And I think that's why it's important to look at indices sometimes versus individual stocks.
Yeah, and I would also say, just as, to go back to macro a little bit, and you're completely right about where the indexes are right now. We didn't see a big move either way when the Fed announced no change to the interest rate.
Right.
So we're probably going to get 2 more rate cuts. We'll get another 50 basis points total the whole year. We have the new Fed governor changeover in June, so we're probably not going to see anything. We might see one cut from Jerome, and then it would be Jerome Powell, and then it would be from the new Fed chair for a second one. It would be up to them.
Howie, do we know who the new Fed chair is going to be?
No, it's the cause of endless speculation. Make a lot of money on Polymarket if you do, but apparently it's down to 4 candidates, and the president says that he's chosen in his head, but he's not telling anybody, so that's interesting.
I'm thinking it's Bill Belichick. I don't know about you.
Yes, it's
with the Hall of
Bill
Fame
Belichick.
snub, why not?
Bill Belichick's girlfriend, I think, is the next one.
Jerome Powell was an academic. Are you looking for? Are you hoping for somebody more business-minded or more market-minded? Because we've had. If you go back to Ben Bernanke, or you go to Janet Yellen, go all the way back to Mr. Potato Head.
It's been professors and researchers for a long time. Right. It's probably not going to be someone like that this time. I think it just needs to be...
no Jamie Dimon's going to come in and be the Fed.
It's going to be an adult. Yeah, Jamie Dimon said, no way.
Yeah.
He'll retire before he does that. Yeah. He said that he's considered jobs like Treasury Secretary before, but he has not... Can you
imagine the ex-CEO at J.P. Morgan Chase being... that's fantastic. You got a guy who's got market savvy, except then again there was Bernie Madoff.
He's more cautious. He might keep rates higher than you would think. Yeah.
Well, keep in mind these markets, for those of you who are following the interest rate, the interest rate that the Fed drops is the discount window, in other words, the money that banks use to finance credit cards and savings and loans. However, it doesn't affect the mortgage rate until later. It's an opener indicator for when the long bond happens.
What's interesting there is that the president famously went viral a couple of weeks ago for saying that he was actually instructing the Treasury to buy mortgage bonds and try and control the price directly, which is something that is new. We have not seen that kind of
that would be
intervention before.
That'd be a derivative market of quantitative easing. Because by the way, every country does quantitative easing. We're just the least dirty shirt in the hamper, and that's when that's when you use
the Europeans.
What
language are you speaking?
You print money to buy your own bonds.
Yeah.
Okay, and then you live. That's how we live off the government lives off their investments. It's a scam, but everyone does it, and the problem is that when the interest rates get to zero, are you getting a 0% car rate or credit card rate? No. That's a good gig if you can get it.
No, every step of the banking system marks it up. Yeah. It goes from interbank rate to bank. It's a little bit better for mortgages than it is for credit cards. Yeah, I mean listen, the banking sector's got to make money too. Poor them. You know what I mean?
Poor them.
But before I go, could I just I want to give the audience a little factoid because. Investors or people that have been looking at the Dow know this, but if you've been watching the S&P your whole life like I do, it's not as baked in. The time period between 1,000-point gain is going to get shorter and shorter just because of that.
I remember when the Dow Jones hit 10,000, and it really was a huge news story. But to your point, the difference for the Dow to go from a 10 to 11,000 is way more difficult than it to go from 49 to 50,000. Because,
so in 2014 we were at 2,000.
Yeah.
In 2019 we hit 3,000. 2021 was 4,000. February 24 was 5,000. November 24 was 6,000. I mean,
and by the way, these are psychological. These are psychological.
They're totally
chiefly,
psychological.
Right?
People shouldn't read that much into them. I was surprised we didn't go a little further above the 10,000 line. Right now we're below, but that's to be expected.
Here's what you need to understand about the indices. If putting money into equities, okay, remember there's only two ways to get rich in this country. You got to buy real estate or you have a business. You own a business if you own stock. If the market wasn't working for investors, it would be in the negative. Okay, we've seen like the Bolsa, for example, in Mexico, be in the negative number. We're positive 50,000. That means since they've been keeping records, back when the Dow Jones started, we are up, basically ups and downs every day, 50,000 points. It would indicate that you should keep your money at risk and invest in U.S. companies or international companies. But if you keep your money in a savings account, you're going to go broke very quickly. Because, I tell you, if you take your money out of the market, every time you think the market's going to die and you put it back in, your average return over the course of 12 years is like 8% versus 16%. So, I mean, the bottom line is, I think you're right, Howie.
I think most people need to dollar cost average, keep it, don't sell it. As the founder of Vanguard said, buy everything and hold it forever.
Yeah. Problem is, nobody's in the business of buying stock. Everybody's in the business of selling stock. because that's where you take your profits.
Well,
Thanks,
you want to eat.
Howie Font, Big Biz Show market analyst. All right, keep it here. Speaking of the Big Biz Show, there is a lot coming your way this episode. See you right after this. Loft 100 Studios, The Big Biz Show, and our affiliates and our hosts are not registered investment advisors or broker-dealers.
Our show hosts make no commitment that the purchase of securities of companies profiled or otherwise mentioned in our programming
are suitable or advisable for any person, or that an investment in such securities will be profitable in general.
Given the nature of the company's profile and the lack of an active trading market for the securities, investing is highly speculative and carries a certain high degree of risk.
We profile selected publicly traded and privately held companies on our program.
Most of these companies that we profile have provided compensation to Loft 100 Studios and its hosts for the profile coverage.
From time to time, we sell shares of the company's profile
profiled in the open market that we receive as compensation for coverage of client companies.
But never sell stocks if we are speaking about interviewing or covering a public company who has paid compensation.
Specific questions on compensation can be obtained by contacting producer at sullyentgroup.com.
Listeners should verify all claims and do their own due diligence before investing in any securities mentioned on this program.
Investing in securities is speculative and carries a high degree of risk.
We encourage our investors to invest carefully and read the investor information available at the websites on the
Securities and Exchange Commission at sec.gov and or the Financial Industry Regulatory Authority, FINRA, at www.finra.org.
I like it.
Hey, is that a rescue plane?
That's right. We're all up in your biz, as they say around here. It is the Big Biz Show. Rolling on inside the Loft 100 studios. Up in your biz. That is the Day Trader Trio. So lucky to always get to hear them play every single episode of the Big Biz Show. Back here at the bar, it is Costa, it is Marybird Godwin, and it is Sully.
And of course, our very special guest, James McCormick, who was in studio last week when I
yes, he was
dealing with some family stuff, which means I have to have him back in studio so I can hang out with him a bit. Because they were while they were here, they did a Cloudastructure podcast pilot.
It was awesome.
Yes, they did.
And which is interesting because this is where a lot of publicly traded companies are going in terms of getting the message out. James McCormick, CEO of Cloudastructure, stock symbol CSAI. I have to ask you guys because you're as much as your technology side and your team are important, your marketing side is a big part of this thing and getting the word out not just to customers but to the world. And you guys are being pretty creative about what you're doing.
Yeah, excuse me, and welcome back, Sully. Yeah, absolutely. It's interesting. When we look at where we're trading right now from a stock price standpoint, we're biased, but we think that we are severely undervalued. So
you're trading below book value because of abusive short selling, mainly algorithmic trading, and failure to deliver.
Yep.
And that's nascent to the industry, and
yes.
and really so you've got the cheaters and the non-cheaters. You're allowed to short stock, and when you see in a stock's research short share availability and borrowing rate, those are the people that might be betting against you. As that short share availability goes up, it sort of means that people are going to bet against you. There's a short on the horizon. Aside from that, though, there's bots that are out there that are purposely driving stocks down to try to make money on the spread. Which means it doesn't matter sometimes how strong the business model is. The regulators are not equipped in any way to keep the bad guys out of the way. So you need to find other ways to get the word out.
Yeah, absolutely correct. And that was a very good, concise description of some of the issues that we deal with as a small cap company. But we've taken a multi-prong approach to communications, trying to get the message out to shareholders so that we can sort of revamp our shareholder base from where we're at right now.
Well, and the only way to battle some of these algorithmic traders and abusive short sellers is to recycle the shareholder base. You got to bring new blood in the deal. Talk about the overview of what you guys are up to. You guys literally have probably the paradigm shifting technology using AI to not be reactive but be preventative in terms of theft, in terms of potentially any sort of malbehavior in schools, in commercial buildings, in the military perhaps, but right now you guys are in multifamily homes. Talk about that.
Yeah. So multifamily was our first big vertical that we entered into. It is the majority of the revenue for the company at the moment, and we really, really like the multifamily market for a whole variety of reasons. We've got great proof points of protecting those properties. We deal with, or we have as customers, 6 of the top 10 multifamily property management firms in the United States and 7 of the top 11. And that group manages 10,000 properties. Jeez. We're in a small number of those right now. And as you might expect for 2026 and beyond, we view a further expansion into multifamily along with getting new logos, is really going to be important for us, in addition to additional verticals that we're working on as well.
You're launching or expanding now into a footprint that I believe is now to 28 states now.
That's right.
Let's talk about that for a minute, because I think that proof of the pudding is literally what this press release says.
Yeah, absolutely. So, what we announced this morning is that we are now in 5 additional states, and it's listed in the press release, kind of Midwest focused. That takes us to installations that we have in 28 states at the moment. And as a quick aside, I had a discussion with our SVP of sales yesterday, and I said, by hook or by crook, I want to tick off the additional ones before the end of the year. Let's figure out how we do that.
Well, I think the message you guys are getting across is that you guys are really designed as an intelligence layer behind virtually any security system.
Absolutely correct.
And I think one of the things people need to remember is you don't need to reinvent the wheel to use your service. You are a template overlay with almost every single existing platform that there is, which makes it a value add and enterprise-wide solution in the business, which doesn't exist so far.
Absolutely. We can work with virtually any existing camera that's out there. We generally add speakers. We have to add our proprietary cloud video recorder. But if someone has an installation, we can put our layer of intelligence on top of it pretty seamlessly and pretty quickly. And we've talked about it in the past, and we could go on for hours on this one, but universities, college campuses with lots and lots of cameras, we believe that could be a huge opportunity.
Well, can you imagine college campuses having a deterrence factor?
Oh my God!
And who wants to bring up school shootings? But you have to. I mean, bottom line, if you have a deterrence factor versus a reactive factor, that changes everything. Hey, listen, before we let you out of here, it's the beginning of 2026. You guys are obviously hitting your marks. Aside from opening up in the rest of the states, what are you looking most forward to here for the next 6 months to 12 months?
Penetration into additional verticals: transportation and logistics, commercial properties, construction. There's others, but those are the big 3 that we're really, really looking forward to. And there's some great efforts going on with the sales team in those areas right now. So, as we said, we can't necessarily say exactly what our plans are for next year, but if you look at the revenue growth that we had in 2025 over 2024, and the fact that we had the largest revenue quarter in Q4 25 in the company's history, you could probably assume that we view that trend continuing in 2026.
James McCormick for president. Come on, man.
28 states today, tomorrow the world. James McCormick, CEO of Cloudastructure, Inc., ticker symbol CSAI. It is the Big Biz Show. We are in sunny Southern California, inside the Loft 100 studios. Wherever you are, watching or listening, our sincere thanks for you joining us, being with us. Our sincere thanks to the Day Trader Trio right there on the screen. Mary, what do we say? Best in the business, no lessons.
Self-taught.
There we go. Nailed it. Back here at the bar, it is Costa, it is Mary Godwin, and of course, Sully.
Have you guys been looking at the gold market?
Oh boy.
Unbelievable. Gold has topped out to 5,600 per ounce. It fell back. To talk about that is our gold analyst, and has been for some time. Trey was with us when he ran a company called Ely Gold. And he not only was a regular guest and a client, but he also was sort of our expert on economy and gold. And gold was at $2,000 an ounce back in 2021. And just a few months ago, we were at 4,600. Here to talk about that and what that means to the economy is Trey Wasser, of course, CEO and director of Dryden Gold Corp. DRYGF is their stock ticker. Trey, I got to ask you, with respect to the rally that we've never seen before, and and we're always talking about gold being a hedge against inflation, but now it's really kind of an economic metric, just like stocks are as equal as stocks. Not just an oh, by the way, precious metals are now coming, and it's probably due to some of the bad behavior in the economy by some past administrations that's caused gold to be sort of popular. But talk about really where it's really unheard of what's going on here. So talk about that a little bit, and what you think about it in regards to the economy.
Well, it really is, Sully. First of all the fundamentals that would generally drive gold higher. Just recently, the dollar, taking making a little nosedive, and that's generally bullish for gold. So that's happened over the last week to 10 days, and interest rates being more or less on the decline. But there's a lot of other things going on. Huge demand for the physical metal out of Asia, and that's Japan, China, India. Both on the retail and the institutional level, but all the way from their central banks down to Joe Sixpack in Japan.
Yeah.
So, a lot of demand. Plus, one very important thing that happened last year for gold, of course, and the banks got ahead of this in the U.S., but gold was made a tier 1 liquid asset, a high quality liquid asset by the Basel III. Now, not only is that control, Basel III is the requirement that they have to have banks in the U.S. for their reserve accounts have to have tier 1 high quality liquid assets. Gold was never that before. So, now consequently banks in the U.S. can own that alongside their treasury bills. And just as important, the sovereign wealth funds, endowments, pension funds that typically would have maybe a bit of gold at the top of their investment, risk triangle, if you will. But now they can put it at the base, and that's what they're doing. So it's just demand coming from all areas, and you have fundamental and secular factors that are driving the price ever higher.
Well, and this is why I think it's time to talk about why investors need to start evaluating junior mining companies, as opposed to just ETFs and just top line stuff. I mean, junior mining companies, might be the opener indicators that tell us really what's going to be happening here. Don't you agree?
Well, I'm a little biased on that one, but
you can put both hats on.
And the real reason for that, Sully, is that the major companies, the producers, they have not seen their costs go up. And while they were making pretty good money at $2,500 gold here a little over a year ago, today those margins are, their costs don't go up very much. So every dollar gold goes up, about 85% goes to the bottom line. Now, they of course have to replace their reserves, and they none of those major companies anymore have that good of in-house exploration. So, they are looking to companies like Dryden to develop the next, big gold camp for them, and then they come in and buy us out. So that's why these junior mining companies, and especially the ones like us that have strategic investments, we have large investments from Alamos Gold and Centerra Gold, two big producers. And they're watching every move we make, and it's, how can I say, just a matter of time.
Trey Wasser is the CEO and director of Dryden Gold Corp. Their ticker symbol is DRYGF. Trey, your company is relatively young. You started it in 2022, and obviously you know what you're doing. You're successful with it. But as you see the price of gold go up, do you see a lot of other people who are not prepared or not adequately equipped to get into the business trying to get into the business?
Well, yes, I just got back from Vancouver, and they do this. I went to two different gold shows out there, which are both are pretty retail shows. So it was mom and pop Vancouver and the surrounding area that for the most part were there. One of these two shows, had the last 2 years had gone downhill so far that had there been another bad year here, if things hadn't turned around like they did last year, I think they'd have folded up. But they were very well attended. A lot of people, starting to look at and a lot of new companies popping up. And to some degree, it's good and bad. It kind of scares me because we were able to raise money over the last 3 or 4 years in very bad markets because of the quality of our project and our team, such. and not many other companies could even raise money. Now, pretty much anybody with that ever had a job at a mining company, even if that was in the mailroom, and a piece of moose pasture in Minnesota, can raise money.
Hey, Trey, talk about Dryden specifically. Talk about what's happening, where you're at, and what we think is happening here over the next 6 to 18 months.
Well, very excited in that yesterday, briefly, we surpassed the $100 million market cap.
Wow.
For that, it's a big round number for one thing, but it's also a threshold for a lot of institutional investors that don't swim in that shallow pond below $100 million. So we're doing very well. We're fully funded for this year to explore our property, which is very large. It's a district scale play, which is what the big boys are looking for, and very high grade gold, great access, highway access. So it's just everything is really right on cue for us, and we're going to have a big year with a lot more drill results, and I think it's going to be very exciting.
Trey Wasser, buddy, we'll see you next week. I'll talk to you well ahead of that time. One of my favorite guys, Will, because he is not only he's an economist as well as an operator, and has gone from gold royalty all the way to gold race.
I wanted to say to him, blink twice if it's Moose Jaw, Saskatchewan.
I wasn't trying to catch him.
No. I know.
I just wanted to get more. Encouraged about.
He's looking. CEO Director Trey Wasser, Dryden Gold Corp. Ticker symbol is DRYGF. All right, keep it here. Big Biz Show rolls on. We're back after this.
Welcome to our Business Focus, coming to you from the Loft 100 Studios in Carlsbad, California. I am Mary Berg Godwin, and I am joined by a friend of our studio, friend of mine. I haven't even met you in person before right now, but Lavell Juan Malloy II is joining us, CEO and co-founder of the Bragg House. TBH is the ticker symbol, but how can you forget that? TBH. I mean, speaking of, you're meeting Gen Zs, you're focusing on Gen Zs, and that's what they say, right? TBH? Or is that more a millennial phrase? Or an old person's phrase?
Well, thank you, Mary, so much for having me. I'm excited to be here in person. I think TBH, people just love it saying, to be honest. They just say, I think it's a very common phrase no matter what now.
Okay, good. I like it. Okay, so I have so many questions for you, but I would love for the viewers just to get the overview of the Bragg House. Mm-hmm. First of all, you have 20 years of experience in tech, law, and finance.
Correct.
You're one smart cookie, okay? And so you've meshed all of these worlds in which you've worked for the last 20 years into creating the Bragg House. So just give us like an overview of what it is, and then I'll dive in a little deeper.
Sure. But you're correct. My background is a securities lawyer, former college athlete, as well as become a serial founder where I had 2 exits. What was really important about those things a lot was community. So what I've tried to build with the Bragg House was a media tech platform that pretty much connected the young adult Gen Z community, and that we did that by building the platform on the intersection of college sports, gaming, and social interactions.
Love it.
And it's a very unique putting together, but because of that, we're able to now build something where the Gen Z stay on longer, and brands, companies, sports teams can connect them more authentically because they feel very close in that platform.
Yeah, I mean, authentic is the buzzword of the day, but it's real because you and I have talked about this off camera, but you're meeting them where they're at. And I believe a big key is their safety. And you said community, so you're feeling safe, you feel like you can trust what you're doing because you've got that community. Am I right?
That's very true. We have a lot of, I think, examples of that. One example is in just the gaming space. I'm sure it could be social media as well, but in the gaming space, women were often felt very not secure, women gamers. And most platforms have somewhere like 5 to 10% of women gamers because a lot of them were being bullied and they didn't feel comfortable. We have over 35% of women on our platform.
That's amazing.
And one of the reasons I believe that is we try to make sure it's a very safe environment. So obviously we have the normal protocols, but again, we make it so it's like inclusive of everyone.
So talk to me about when somebody wants to sign up with Braghouse, do you have the games, you're not embedded into other games, you are your own separate website URL, thebraghouse.com,
Correct.
right?
Correct.
So what's that experience like for a user that wants to sign up with you and experience this community?
Great question. So you're right, it's a separate thing. It's a React actually platform that we built out ourselves. And what happens, the user experience is soon in, you log in, you set up an account, you can immediately find other people in your community by schools. By certain other likes, by games. You can connect to them.
Can you do it with your contacts too?
Yes.
Yeah, okay.
Yep. You can so you can connect to them socially. You can see a list of what games are being played, what other competitions are there.
Okay.
And obviously that's by school too. So if I am a University of Texas student and I log on and I say, oh look, there's people from my chess club playing this game, I may want to be a spectator to watch that game.
And are they playing the game on your platform?
So great question. We are the consoles are not part of our platform, but any console can be integrated to our platform. So you can play on Xbox, you can play on PlayStation, and wherever you're playing, it's a pretty simple login when you do it. You do it on the when you first set up an account.
Yes.
You just play, you press, stream, automatically puts you on the screen.
Oh, that's genius, Lavell.
Yeah,
you're even more genius than I thought. So you're seeing them, and then talk to me about, we were talking about college sports. So how does that world intersect with the gaming? Besides, a lot of college kids are gaming, but how does it affect, is it also betting and that kind of thing?
Yeah, great question too. So what happened, and I guess it's kind of good to start with the void. What we noticed, and when Learfield, that's one of our major partners for the college scheme, what we noticed is that people, young adults, Gen Z, weren't engaging in traditional sports the way I did when I played baseball. They weren't going to watch the games, they weren't sitting there. So what we did is we created this platform. Gaming is the mechanism because a lot of people did that. They also, a lot of the spectators, you mentioned gambling. And one of the things true is we took something that, like gambling, we took bragging. So I created
which we all love to do a little bit.
It's true.
Come on now.
It's true. Well, I would even take it a step further. We all love being right about something. So if you can say, oh my God, I think that Mary is going to do X, and then you get rewarded for that, and you get on the leaderboard because you said it was correct. That is
dopamine hit. I mean, it's just like
it is.
I just see this smile on my face. I'm like, yes. Especially when I'm right against Sully, but that's another issue. Okay, so sorry, I interrupted you.
No, so we took that bragging, which is, safe betting. Again, safe. You don't have to spend any money. It's no thing. So we took bragging.
Yes.
We integrated that. So now everyone can participate. Everyone can feel engaged. And then we based our entire data model by the way people brag, by their interactions there. Since we have a community that's engaged, they do more, and then obviously the data that comes out is even stronger.
So let's talk a little bit more about the data, because like you said, you are collecting this, and people are living there. You're not, I believe you said the term renting, which other places do. You are they are part of it. They're in this community with you. So talk about how the data informs what you do and how it can help set you apart from other people.
I think it's really important because, and you're right, like they live there. So we created all this around them. And the first thing is to realize that we look at data, we look at community as an asset class in itself. And it's something that's permanent, that's valuable. So the first to understand why the data is so valuable is that we notice that Gen Z do not like to be sold at, they don't like to be talked to. They don't dislike ads, but they prefer relevance.
Yes.
So the first thing in the data was understanding what they wanted. Once we were able to do that, we gave them what they wanted. And then through us putting in specific data sets, activity triggers, surveys, we were able, they then happily was saying, we want to see this.
Yes.
We don't want to see this. So the data that came back was something that now we realize is very, very valuable. It was behavioral predictive data. And if you can tell any company, any brand, this is what they want to see.
Yeah.
Build this sneaker in 2 years and it'll be a multi-million-dollar thing. That's invaluable.
Yes.
And no other company has that type of data. They have passive likes, they have this.
Right.
But they can tell you that, you know what, kids at the University of Virginia, they want to see this type of, drink, this type of thing.
Talk to me about 2026. What's the thing you're looking forward to the most?
2026, we're expanding, so we're going to do all the SEC schools. We're going to then move to the Big 12 schools. So it's like,
amazing
to have that much kind of engagement. And really, the goal is to have our own ecosystem where everything runs through the Bragg House. We're pretty excited about that.
That's awesome. So. I mean, because people love their college sports and college teams. I mean, that amount of camaraderie you have right there just gets people excited.
Exactly.
So I'm so happy that you are in person here today.
Same.
Get to chat with you. Lavell Juan Malloy II of thebragghouse.com. The Bragg House. I'm super happy that you're here. Make sure you check it out. And that's enough from us today on the Business Focus. We'll see you again next time. Making me nervous.
Big Biz Show, wherever you're watching, wherever you're listening. We are in Southern California inside the Loft 100 studios. Hope you guys are having a great day. As always, appreciate you being along for this wacky ride. They always are. They are the Day Trader Trio. And back here at the bar, Costa, Mary Godwin, and Sully.
Who do we have there?
Laura Selecky is the VP of National Accounts for Bebemos Tequila. Of course, most importantly, the website, bebemostequila.com. We chase the sun. Laura, welcome to the Big Biz Show. How are you?
Thank you.
As you can tell, we kind of love Bebemos around here.
Yeah, it looks like you...
Why? Because it's delicious.
Delicious, yeah, of course.
So did this company start from scratch? Like, I think I'll start a tequila company. Because I think that every Friday night, if you know what I mean.
I mean, it wasn't that simple. I know Preston's been on the show, but John and Preston and Patrick had this passion for tequila. Preston's wife had started a brand called We Drink Bubbles, subscription-based platform importing champagne. And
didn't it take off during COVID? Because people were stuck at home.
People were stuck at home.
Was this mail order booze?
Yeah, any way to get booze to your door. And so Preston and John, lovers of tequila, basically went to tequila and tried to mimic that same platform. And lo and behold, it worked. And they ran into a family, Casa Marengo, and they had an abundance of tequila. And they said, will you make a tequila for us? So
it's interesting because we wanted you as a guest because as these young adults here are trying to figure out their way in the world and how to start business or join business, it paints the picture that anything's possible. It's a Me Too thing, right? Like if they started after their wife had a booze to their door business, that's pretty ambitious. It's not like the tequila space is not crowded. Right? It's almost like right now. We had 1800 and we had Cuervo when we were kids.
Right.
And now you go to a bar and what made you guys think you could be bigger, better, faster, stronger, cheaper? Like, what was the tiebreaker? Because you're going to have to stick out in the market.
I mean, there are a few things that I think they did wonderfully. One of them is they didn't focus necessarily on the tequila. They focused it on, like you were saying, community. You want a community. We wanted to bring a community of people that loved coastal San Diego, that wanted a 70s vibe, and the icing on the cake was the liquid in the bottle was delicious. They also made a hoven, which is not a widely known style. So for those of you who don't know what a hoven is, hoven means young in Spanish, but in tequila it means a blend of aged and unaged tequilas. So ours is 80 Blanco, 20 Reposado, and Añejo, all blended into one bottle. So super smooth.
It is the bottled romance of Mexico, Mike.
Well, and the bottle, I live in a mid-century modern house. And the bottle...
What does that mean? You got shag carpet?
We don't have shag carpet, but this bottle looks like it was probably in the house in 1968 when it was built. Whose idea was the bottle? Because it's magical. That could be a lamp in someone's house.
Those bottles are magical.
A bunch of stuff.
And I think they are lamps in people's homes. But Patrick, our creative director, who he's a third co-founder and lives in Nashville, he is an amazing person connected to the music industry, and he is responsible for every billboard, everything gorgeous, from the bottle to any piece of marketing you see on social and far beyond. So.
Does it go that granular? We have a person saying we need this type of bottle, and that's a marketing decision. Like because obviously, vintners, with wine, it's all the same wine bottle. Was that like a meeting or 5?
With liquor in particular, everybody has a different bottle, and I think you want to stand out, especially as you said, the space is super crowded, and the amount of people that told us we were crazy for launching a tequila in this market.
So as a marketing person, distribution is everything. The decision to go San Diego and not go everywhere, that casts a smaller net. Was that a smart decision? Is that kind of the secret here?
We really wanted to own our own market, go an inch deep and a mile wide, just bringing a huge sense of community in San Diego. And we found out in 2025 we exceeded what we thought we could do. So we're pretty excited for 2026.
You're watching you're hearing about a company who started from scratch, a tequila company, and you guys are sitting out there going, I don't know if I want to be an entrepreneur, I want to work for somebody. Are those types of dreams too ambitious for you right now? I mean, are those types of things? Because when I was in college, I just want to get hired by an insurance company. I wasn't even thinking about starting it. Is this something that seems reachable to you?
Well, Gio wants to start his own brand.
Yeah.
I would encourage you to go to tequila and really spend some time in the distilleries and see, how it's made from start to finish, and then maybe intern in a spirits company. I mean, we're
like Bebemos. And Mike and I would like to be your testers, by the way. So Laura, for you, so what's the low-hanging fruit for you in terms of gathering market share and getting the word out? Because isn't that the next step? Is getting brand loyal folks to come in and continue with the brand story?
Yeah. So I mean, we're definitely going to expand in 2026. We're going to expand into other territories, into the chains. Hopefully by the end of 2026, you'll see us in a few grocery stores. So we've just scratched the surface in San Diego. I mean, we're in about 225 accounts in 7 months, mainly restaurants and bars. So we feel really good about that. But there's like 2,300 spots.
It does, but I have to tell you, it does feel like the $3.95 pale ale that AleSmith did. Yeah. San Diego brand, because you're everywhere. On an overall marketing question, not with this. If you were to talk to these folks and talk about how important marketing is, even to small business, what would you say to some startups and some mom and pops? Is it a metric still, or do you have to wait to be a big company?
It's definitely important, and I think we've been so lucky to have the talent behind it. I think if you thought you could launch just a tequila brand without the marketing that we put behind it, you may not be as successful. So yeah, I think it's pretty important to have the marketing.
So what's next for you guys for Bebemos for like the next 6 months? What's the plan in terms of rollout?
We're going to expand into Orange County, into some.
Any thoughts of distribution into the whole world, or is it?
Yeah, but we have to go slow. Getting into each state is very, very tricky. Alcohol laws, distributors. So yeah, we're searching for a distributor here in San Diego, and we'll see where it goes.
If you could give any advice to these young people here that are getting into business, would you say it's an encouraging environment right now, or?
I would say it's definitely encouraging. Follow your dreams. If you're passionate about it, you'll win.
Love it.
Laura Selecky,
Vice President, National Accounts, Bebemos Tequila. We thank Laura for joining us here today. Of course, Lavell Juan Malloy II, CEO, co-founder of Bragg House, our good buddy Dan Negrodi, and his wonderful class from Cal State University.
You guys come back. We love you.
San Marcos, give yourself a hand. All right, that's going to do it for this edition of the Big Biz Show. As always, thanks for tuning in. We'll see you next time.
Welcome to Loft 100 Studios, San Diego's Emmy Award-winning production studio, creative hub, and unique private or corporate event space. Host your next corporate or special event in our spacious main room. Utilize a green screen or our 3 million LED lights video wall to create the newest upcoming sales video, or record that podcast or YouTube show that you've been wanting to make happen. Take your creative endeavor to the next level at Loft 100 Studios. Scan the QR code or go to loft100studios.com to book a tour.